Hi everyone, we're going to take a look at Hyperliquid Hype today as it seems to have uninvalidated its double bottom pattern. So we had this double bottom pattern which we were looking at in the back end of December and early January, and despite some of the market taking off a little bit at the beginning of the month, you can see here this move here, Hype couldn't quite confirm this double bottom and it's since invalidated with a lower low, meaning that a lot of attention of course was taken off this token, and we were looking for an entrance down here at around 18.89, around essentially $19, for a support entrance down here to trade the range. Now that was about to come into play. You can see we already had our TPs all lined up, but since then of course, just really over the last 24 to 36 hours, Hype has broken above the double bottom neckline, confirming the pattern, or at least the break above 29, around $29. $28, $29, and now we have a trading opportunity on the flip side. So the first thing is we need to calculate where we're going to take profits, so we'll just put this broadly on here. So we're obviously not going to chase this. This could continue up from here, and the higher it goes will determine when we enter, but ultimately the first line we could look at to enter is here at around 28, right? That's a simple confirmation of the double bottom neckline with nice confluence, with strong resistance on the flip side, which hopefully should be support. So, and you can see here lots of action there. So that would be the first idea. But given the market is quite hesitant at the moment and Bitcoin hasn't found its footing yet, you could argue that you may want to come in a little bit lower. You can see here, this is also resistance, hopefully turning into support now. So you've got a couple of options. Now, what I'll be looking at is most likely looking for a more modest, a more secure entry down here. And then the question is, where do we take profits? Now, in fact, the advantage, of course, is that we've broken above not just this into this range, but the upper range as well. Now, that does add a little bit more credence behind coming in here. So I'm going to let's set it up as a textbook play for now, and it gives us a more defined area to put our stop loss. And of course, risk management is quite a fundamental part of this. So let's look at this horizontal ray here as pretty much where the price action was looking to go. There's a bit, you can see there's quite a defined resistance area here. So this is kind of this whole area is the upper range, and this is the kind of the transitory space. So I don't think we can expect Hype just yet, based on its current move, to break above $36. But we could expect to be able to trade that range. So if we look at it like this, we're looking to take profits essentially just below this range and around what looks to be around $36, and we're looking for an entrance either at 28 or, if you're a little bit more conservative, $26. Now, the advantage of coming in at $26, you have a slightly lower average price, but in terms of now what we can expect, if this, for example, Hype continues up from here just a little bit higher, then I would probably switch my entry to $28 as opposed to 26, because it's got that nice retrace value. But this is about a 60% retrace on this current move, whereas if it goes a bit higher, then this would be a little bit more of a realistic target. So, or you could start to scale in as well, enter a little bit of position at 28, and then if it does head lower, add to it again at 26, so you could scale in. So you're essentially scooping up the price action like this, right? Something like this, and then away we go. So that's maybe the way you want to play it. But a nice solid move from Hype, offering us a clear definable entry at a couple of levels with a TP in the range, with the range high just overhead. But that's Hype.